individual known as Mr. Market. The key thesis of how to listen when markets speak is one with which I heartily agree. The end of the Cold War in the late 1980s and early 1990s ushered in a generational financial boom that has lasted close to 40 years, albeit a boom punctuated by numerous crises. The principal drivers of the boom were globalization and the integration of Asian labor and savings, not forgetting talent, into an increasingly borderless financial system that successfully harnessed the innovations in information technology emanating from Silicon Valley. These powerful forces drove down inflation from the heights of the 1970s to the low point of 2009. But that era is now over. What ended it? The prime suspects are central bankers who grew increasingly reckless in their efforts to stave off crises, notably in 1998, 2001, 2008 to 2009, and 2020, by cutting interest rates and then buying bonds and other financial assets, quantitative easing, massively expanding their balance sheets. These measures, McDonald argues, acted as a volatility suppressant, encouraging structural shifts in financial markets in favor of exchange-traded funds, passive investment, and short volatility strategies. At the same time, China's admission to the World Trade Organization and its securing of permanent normal trade relations with the United States in 2001 ensured a sustained hollowing out of U.S. manufacturing capacity, with all its social and political consequences. Third, fiscal policy, beginning with the global war on terror and culminating in the Biden administration's various industrial policy measures, has driven the U.S. federal debt to a height relative to GDP that is unprecedented since World War II. Fourth, the political backlash against globalization has produced a new protectionist and anti-China bipartisan consensus in Washington. Finally, the global campaign to discourage investment in fossil fuels in favor of renewables is leading to an unintended energy crisis. McDonald's conclusions are bold. The great migration of capital, moving from growth stocks into value stocks, has only just begun. We are in the first inning, and as every rally in the growth space fails, it will bring more disappointment to those investors who are still searching for the promised land. One day, they will grudgingly pack their bags and walk into the value sector. They will see the rally happening in gold, silver, platinum, and palladium. In other words, the inter-Cold War era of disinflation is over. Inflation is not returning to 2% or lower. The dollar is destined for a period of weakness, and investors would be well advised to ditch tech stocks and invest in precious metals, not to mention copper, lithium, cobalt, graphite, and uranium, all of which will be in short supply relative to the ambitious demands of the energy transition. Some might say this makes too little allowance for the likely benefits of further technological innovation. Think artificial intelligence, or the potential comeback of secular stagnation as demographics and debt dynamics slow down growth. But McDonald's case for the financial equivalent of a fourth turning is strengthened by some star witnesses, including such legendary investors as David Tepper, David Einhorn, and Charlie Munger. Interviews with these luminaries, as well as with less well-known members of McDonald's Wall Street network, are a key part of what distinguishes How to Listen When Markets Speak from other books on contemporary finance, most of which ought to be titled How to Stay Awake While I Pontificate. McDonald's humility is a rare thing in the financial world. To his credit, he has never forgotten that he started out as a pork chop salesman along the Cape Cod Canal. I can't pretend to know the financial future. Back in 2008, my book,